Sup traders, a little vlog for you here, cruising with the dog as we go to dog training on a Sunday morning. I'm going to share a lot of ideas with you here in this video. Hopefully this video gets uploaded. We'll see if it does. If it finds useful, let me know, but it's useful for me just to talk. So I've been doing a lot of back testing Friday and Saturday. I'm talking a bit about my methodology and some of my findings. What's made it possible for me to do a lot of back testing on Friday and Saturday, and like serious legit back testing and data collection, is giving up crypto. If I'm trading crypto and I'm online on the charts Friday and Saturday all day, it's a bad combination because there's live moving charts and I end up looking at those and I end up trading those. So instead, I'm limiting my world to mostly just Forex, and we're going to talk about that a little bit, why. But one thing that I'm happy about is I made the decision to give up crypto, and it's been super easy. I haven't been looking at crypto charts. I haven't felt any FOMO. I don't care that some of the prices are high. And I'm happy with the improvement in the quality of my life. And I'm also happy with my ability to collect more data. I've also realized that a lot of my back testing and data collection so severely lacking in the past. And it probably still is now, but I would have different systems or setups, and I might have been able to approximate a win rate or a risk reward, but for a lot of systems I had no idea what a monthly return looked like realistically, an average monthly return, and the average monthly returns were all over the place. I mean, I think about my first mechanical system, which traded one asset. It had amazing statistics, 50% win rate. No, it was like 40% win rate, 8 RR. Insanely good, right? Well, the problem is it only traded like 2 or 3 times a month. And it's just, I couldn't stick with that. Because I couldn't not take a trade for 2 weeks. Or like, you think about it, you might not have a win. If you take 2 trades at 40% win rate, you might not have a winning trade for 5 months, 6 months, right? So that system is lacking. And then other systems I just didn't even have data. But now I'm doing a great job of getting the data. And earlier in the year, maybe especially the past 6 months, man, it's been surf season and I've been surfing and I've had an awesome social life, hanging out with a lot of people. And now I'm like, let me turtle down and hermit down a little bit and focus a little bit more on back testing, because I'm not really getting the results that I want. I mean, it's one thing if Bespoke had given me my $800,000 in funding and paid me out, my $8,000 pending payout, but that didn't happen and I'm in a little bit of a tighter spot than I wanted. So the goal is not only to make money trading, but is to never have a losing month. Is it possible to have a winning month every month? So my idea for how can you have a winning month every month is there's 2 ideas. One is to have an incredibly high win rate, and that's possible. The other is to have an edge and an extremely high volume of trades. To me, a high volume of trades just makes more sense to me. But I mean, say you have a 55% edge. Well, say even you have 50%, like a good system is 50% win rate, 2 RR. That's pretty good, right? However, frequency really matters, because if you have 50% win rate, 2 RR, but you take 8 trades a month, you're going to have a lot of losing months. You're going to have months where you lose 8 straight coin flips. That's going to happen. It's okay. It happens every once in a while. Or you'll win 2 flips, you'll lose 6 flips, right? So if you can have a 50% win rate with 2 RR, but you can trade 50 times a month, your odds of having a losing month are really low. So one of the things I'm looking at for consistency is frequency. Another thing that I'm looking at is reproducibility, repeatability. So there's setups. One of the things that's drawing me to Forex is that it doesn't matter if the market goes up or down necessarily to make money in Forex. You can be totally oblivious. So say you have a strategy that trades long only risk assets, gold, Bitcoin, S&P 500. And I believe these are good systems, and I believe for the most part, it should be long only on these. Not always, but for the most part. Reason being, with inflationary money supply and the social norm of investing, these things tend to go up on a higher time frame. If you look at the weekly charts for any of these, they go straight up, right? Now there's drawdowns, but if you have a system that shorts Bitcoin, that shorts the indices, that shorts gold, I mean, it's going to have a lot of really bad periods. So it makes sense to, for the most part, be long only. The problem with being long only is there's months where the market just goes down and you either have no signal to go long or any long signal loses, and then you're not going to make money every month. You're not going to make money every month if you're long only on and some of the best traders actually who only trade long only equities don't make money for a year. Either they don't trade or they're out of the market, or all their trades are losing. So this is leading me to Forex, where, okay, they fluctuate back and forth, they mean revert, and they're reproducible, and there's a lot of uncorrelated pairs. Obviously, the USD Canadian dollar is correlated with AUD Canadian dollar, but it's probably not correlated for the most part with the European dollar, Chinese dollar, which isn't correlated with GBP, Hungarian forint, right? Like there's a lot of uncorrelated pairs that you can trade. So my system for trading Forex is to typically look for reversals. The idea that while risk assets tend to go up in value, currency pairs, not always, but they have a tendency to fluctuate because it's just two government monies that print money back and forth, and it depends on the policy. So I'm looking to trade only reversals, and I'm looking to trade those reversals at an old monthly high or low. Price comes up to the old monthly, has a big wick on it, turns red, I'm gonna short, but I'm not looking to hold for a trend. I'm looking to get out with the reaction to our price comes down to the old monthly low, hits it, closes right at that level. If it's GBP USD, I'm gonna buy there. I'm buying a low price, run my stop a little further than the low of that candle, maybe 0.3%, 0.40 pips, target 60, 80, 100 pips, get out, try to get out within a couple days. And that's my setup. And if you think about it, there's two new monthly levels created on a month. So the maximum average number of interactions with an untapped monthly level for the first time is 2. So, but in reality, we don't get 2. It's maybe 1.5 because some of them don't get touched. So you have maybe 1.5 trades per asset in a month, but I can trade 50 of them, and a lot of them are uncorrelated, and get up to 70 trades in a month. And from my data, what I found is, for the most part, if I'm doing a lot of takebacks and backtesting, it's like 60 to 70% win rate with the 2R. With fees, it's more like 1.8R, or maybe 1.7R. But I mean, for the majors, slippage is like 2 pips, and I'm trading a 30 to 50 pip stop, so it's pretty insignificant. Commissions and carry fees. Oftentimes I'm getting paid for carry fees because I'm trading reversals, so not too bad. And when I'm back testing without takebacks, the win percentage is still 50%, maybe 45%, 48%. And even if it's like 45% with a 1.8 RR, but I flip that coin 60 times, it makes a lot of money, right? So the way I've been back testing is, and this is an improvement, really big improvement, is I'm not just taking an asset and going back through the years. The goal is to be profitable every month, so I want to test month by month. So I'll pick like January 2023, and I'll back test 1 month of one asset, and then I go to the next asset, and then I go through 50 assets, and I'm writing down the wins losses by day of the week. So I'm getting an idea of how many trades there are per day, how many trades I'm carrying, how long I'm carrying those, what the worst drawdown is, how long or how many days I don't trade. And I'm finding out with the system, yeah, I trade most days. Occasionally there's like 6-10 trades in the same day, so I'd have to risk quite small on those. Not even by choice, because as an American I don't get that much leverage on these trades, so I'd risk like 0.25 or 0.5% at most on those. And so yeah, getting an idea of how the monthly goes. And I've been going through this, and every month's a big winner, and I get back 14 months, I get to September 2022, and with all my cheating and takebacks, barely make it a profitable month. Losing month, there's a period where there's like 20 straight losses. It's crazy, because before I had only seen I saw 10 losses in a row at one point, but mostly like 4 losses, 3 losses. So now, to me, if I'm flipping a coin, I should not ever lose 20 coin flips in a row. Something's wrong. Like, the system broke here. Why did the system break? So, right, it's not really possible to lose 20 straight coin flips. It's not possible. Something broke, right? So I'm going in, and here's the thing, like, you try to back fit and curve fit and optimize for a month, but like you want to do that without breaking something else, right? That's the problem. Is like you change your system to try to fix a problem, and it causes other problems in other areas. So I'm looking at September 2022. How do I make this at least not a losing month without screwing stuff up elsewhere? So rather than just tweak random parameters, I look at the month, and the question is, why was it a losing month? What happened in this month? Well, September 2022, a lot happened. First, that was the bottom in the stock markets. That was about the bottom. Wasn't quite the bottom in crypto, but it was. The equity markets were down 10%. Gold hit a low. Bitcoin was way down. If you're long only, you're having problems here. If you're shorting, maybe you could have done well, but it's hard. But we're concerned about the Forex markets. What happened? The dollar hit its high, and it was a high of multiple years, and it kind of went parabolic, but it peaked and it blew off top, and it reversed in a big way. So there were two things that could have made September profitable. So first, let's talk about the winning trades and how to reduce the losing trades. So I have an idea, like I'm normally used to trading what I talked about, these tight reversals, 0.3%, 0.5% stop, 1 to 2%. Well, when the dollar topped, it gave a reversal signal, but price moved like 3-4% in a day. And I didn't want, in my backtesting, I didn't want to trade it because I thought it would take too long to resolve, my stop's too wide. What I found in reality was, and this was September 26, 2022, there was a huge reversal, and it resolved pretty quickly. I wouldn't have had to hold those trades so long. And the reason I didn't want to hold trades a long time is because longer holds lead to more mistakes for me, and also longer holds tie up capital and prevent me from taking the next signal. Turns out there wasn't another signal until these signals resolved and reversed kind of violently. So if I adjusted and say, well, I'm going to take whatever signal no matter what the volatility is, if I need to widen my stop, I'm going to narrow my target, or widen my target too. So that was the first thing. Now the second thing, and this is interesting. So I mentioned to you that my system, I'm looking at old monthly highs and lows. Well, one thing that happened is the dollar was in such a strong trend that a lot of pairs some pairs were in price discovery, which isn't tradable to me because there's no monthly, but some pairs were dumping and hitting old monthly levels from 5 or 10 years ago. And when I was doing my initial backtesting, I have an indicator that shows every untouched monthly level. And I'm trading every one, and this one I lost, and this one I lost, and this one I lost. And there's 8 straight days of just puking and losing signals, and all signals are lost. And I realized, like, well, think about this. Why should price, it's September 2022, why should price bounce from the November 2015 low that was 5 years ago? It's on nobody's chart. It's just trending. Step out of the way, right? I'm not trying to trade like anti-trend mean reversion. I'm trying to trade range mean reversion, right? So theoretically, think about this. Is price more likely to reverse from last month's low or a low from 17 months ago? Clearly, it's got to be last month's low, or last month's high, or a low from 2 months ago, or from high from 2 months ago. Reason being, one, it's on everyone's chart. Everybody's got last month's low on their chart. Everybody's got last month's high on their chart. It's a big target. People are totally oblivious from a low from 5 years ago. And depending on their broker, if it's a newer broker with newer data, it's literally not on their chart, right? It's literally not on their chart. So, and also, if you think about it, if price is taking the third, fourth monthly high in the same month, and these are old monthly highs, it's trending. I'm not trying to trade counter trend. I'm trying to trade, like, the ideal conditions for mean reversion is not a blow off top, actually. Blow off tops are hard to catch because the volatility is so high. It gets crazy. The best for mean reversion is when we're in like a kind of a trend and a band, a range, and you hit the high of that range. So I realized, like, I can update my system in a way that's not gonna prevent the system from making money in other places, gonna save money. And what is that? I can expire old monthly levels. I should only trade untouched monthly levels if they're, I still need to figure this out, but say 6 months old. But I can, and at that point I want yearly levels on my chart, because if price comes down to an old yearly low or an old yearly high and reacts, I'd like to trade that one. But in between, if we break the 6 month high or break the 6 month low, we're in a trend, let's just let it run. I'm not trying to reverse it, right? So I found I need to go back and look at it. It looked like it would improve things, save a lot of losers, and I looked at certain charts where there's times where it would save like 6 losses in a period because the price is breaking out and interacting with these old monthlies. So that's a minor detail, which isn't about making more money, because most months it doesn't come up. It's about saving money when something like March 2020 happens, when something like September 2022 happens, when something like September, October 2008 happens, when something like, what's another one? 2002, 1987. There's a lot of these that happen, right? So it'll get me out of counter trading trends and just focus on the last couple months price data, and then beyond that, you could trade a reversal at an old yearly high or low. So, but the only way that I discovered that was doing this back testing month by month. Because if I was just trading by yearly, I wouldn't even really notice that, oh, this asset has 2 or 3 losses in September. But when I'm trading all the assets together, it's like, damn, all the assets have a loss in September, or a couple losses in September. That becomes a problem. And the back testing is only possible because I gave up crypto. So, pretty excited about that finding. And then, almost done with this video. Last update I'm going to share with you guys is, so I'm backtesting Saturday, Sunday. So I really only need to trade the close, right? The daily close. And one of the errors that I make is trading the daily close too early, and the signal changes or the risk reward parameters change. And now I don't really know my edges. And that happens sometimes. The first thing I can do about that is I have a computer lockbox. Make sure I lock my computer until within 1 to 2 hours of the close. And the other thing that's really helpful is daylight savings time just changed, and market rollover is at 11 now. The daily candle closes at 11 a.m. I'm typically getting up around 7:38 and ready for my work day around maybe 9:10. So that's perfect. Gives me 1 to 2 hours before the close, where I won't be too early if I do act. And then goals for this week. Well, first is it's Sunday today, and Sunday opens. Try to really make my Sundays very social, so that Friday, Saturday backtesting, Sunday social, do things, be active, so I'm not bored, so I don't need to be on the computer, so I won't check the charts. Goal for Sunday, don't check the charts. Lock my phone, and then for this week, when I'm done at 11, I'm going to turn my phone off for the day, Monday through Thursday, and lock my computer until the next day. Or I'll probably turn my phone off at 1 p.m. Make sure I'm not chart watching so that I get good sleep. Sometimes I have the problem of if I have access to my phone, I end up chart watching, and then I'm chart watching late at night, and then it fucks up my sleep, and then it causes me to make errors the next day. Getting good sleep is super important, so that's a goal for this week. And also, the next 6 months, if I wanted to, I could get a side job, which I might like to do for something to do, because if my trading day ends at 11 a.m. and the social activities that I have are at like 6 p.m., I've got a 7-hour window. I could work for like 4 or 5 hours, get some side income, like do some manual labor. I don't know. I'm going to think about that. But coming into this week, feel pretty good about my chances of making money. So let's go, let's get it. Much love. Covered a lot of things in here. Hope you found it useful. Appreciate you. Thanks for listening. Let me know what you think in the comments, and peace.